perspective, it's actually a lot better than it was 4 or 5 months ago. Hey everybody, Jaysen Barlow with Sell for 1%, joined by my dad, Dave Barlow, my brother, the man on the streets, Jamie Barlow, and Rich Sircone with Equitable Mortgage to give a market and 2-minute update for the week of, April 21st? The week of April 21st, today's the 25th. I had the documents to show that it is a bloodbath out there, but I'll let Rich take it away. Dad said don't get too negative, so I'll leave it a bloodbath. It's not negative out there. Depends on your perspective.
It depends on if you've got money in CDs because you're probably making pretty nice interest rate.
Yep.
But if you're trying to get a mortgage, you're going to pay a higher rate right now, and it's all about inflation and at least the statistical anomaly that we are creating jobs in this economy, even though if you peel the curtain back, the jobs are all part-time jobs, people getting second jobs because they can't make ends meet with their primary job, or another spouse getting a part-time job. So, all of that is leading to inflation, and the government is looking at, the Bureau of Labor Statistics are looking at jobs being created, and interest rates are up. I'm sorry to say we're pushing towards the mid sevens right now on the base interest rate, maybe 7.375. You could be lower if you've got the right mix of things in your file, but you could be higher with a little bit negative credit and into the 7.6, 7.7 range pretty easily. These are 30-year fixed numbers.
It could be 4 or 5 months ago, and interest rates were at 8 and at 8. So,
yeah,
perspective, it's actually a lot better than it was 4 or 5 months ago.
Trending in the wrong direction, though, because but it's nice to have a positive person, Dave, but we were in the mid 6s about a month ago, and so we are seeing a pretty steep
Sure, but
increase.
Back in 1984, we were at 18%.
Oh, no.
Yeah, and home $20,000.
No.
And on average, we are still less than the 30-year average of mortgage rates. So,
Ebbs and flows.
Where do you want to go?
Flows.
And
Fluctuation
values are up. So, I mean, the small business sentiment is at the lowest it's been since 2012, back with, that last crisis when we hit the bottom. So, I mean, we'll see where it goes, but I mean, I don't know that back when, I don't know. You know more than I know, Dad, but it seems to me that between groceries, electric, gas prices, I mean, I'm dying on the vine here. It's like, but, when we're a household where I'm the only one that, brings in the income. So listening to Rich talk about spouses get jobs, stuff like that, but if you look at times, if you look at the average sales price of a house back in 2012 here in Columbus, it was $157,000. And now it's $350,000. So, exactly. That shows the devaluing of the dollar in my mind. Well, sure. I mean, but the point being is that you can wait for interest rates to go down and hope that housing prices go down at the same time, but that's not what the trend. Yeah, I'm not saying that. I mean, in my opinion, rates are probably going to go up. So if you're a buyer on the fence, I'd be pulling the trigger. Yeah, because I think that if inflation keeps going the way it's going, they're not going to cut rates.
And the value of the house is going to go up. You have to remember that.
Yeah, I agree exactly, Dad and Rich. I mean, that's in my opinion, that is why you see the hedge funds the last several years buying up property. They know if inflation's going to happen, would you rather be in the stock market or would you rather have something like property or metals?
I agree with that.
I think it's a big hedge against inflation.
Well, why aren't they still buying? Why are they not still buying then?
They are buying.
They are?
Yeah, different areas. Absolutely they buy.
Well, they're not buying any of my listings. I mean,
that's because yours were all overpriced.
That's not true. 3 years ago, every house I had some sort of investment group making an offer on it. And it's, I can't tell you last time I saw an investment, offer come through on any of my listings. Have you?
Yes, I have.
Okay.
Yeah, it's not the same way it was, but anytime I post like an as-is fixer-upper, I get those investment offers from like Sylvan.
From these. Okay. Yeah, I was going to say, I mean, I get them from, the little dinky one-man shop, but I don't, see the big Sylvans or America for Rents or, some of these big guys that we used to see that were buying up everything.
Yeah, in my opinion, property is a great hedge against inflation, and that's an argument for my buyers as to why you would want to buy, is as the price of everything goes up, what's going to happen to your property value.
And particularly in Columbus, Ohio.
Yeah, so you're betting on Columbus and yeah, exactly.
And we've talked about
that we all agree on.
We've talked about this. Lock in your rate, and if the rates go up, you're good. And if they go down, you can refinance.
Yeah.
But the one thing I think we probably all can agree on is that, at least I do, I feel like home values, because of the limitation of properties currently on the market and the projection, at least for here in Columbus, that we're going to have 30,000 plus people move into the city every year for the next 20 years, that they have to have some place to live. And so home values are going to continue to go up.
Or hotels and apartment buildings, as we're seeing, as they try to jam you in there instead of buying a home.
I think I sent you guys an article here from Columbus Business First that the the Columbus Housing said that we need another 200,000 houses built in the Columbus area before 2030. That's 6 years away.
Now would be the
world they're going to build 200,000 houses.
That'll be everything that's crazy. If we do enter into a recession or anything economically, I imagine the builders are going to start pulling back again, like they did back in 2010, 11, 12. So it's like, I agree with what you're saying, Dad, about people coming in. And my opinion, the supply and demand issue is what's keeping, even with rates at 8%, keeping everything appreciating at almost 10% appreciation still. So, I mean, Columbus is still on fire. Every article I see, we're one of the best markets in the country.
Forbes said we're the number 8 hottest market in the country. And on a very regular basis, the NAR, Realtor.com says we're top 5.
Well, just like in the last, time that we had any type of housing issues, Columbus didn't get hit as hard as California did. We're anchored by insurance companies at Ohio State University. Wewe're the
economic base is
the state. So we got a lot of good things going on.
Now you got Intel.
Right. There's obviously, there's tons of industry and business here in Columbus. And, so you would think it would keep going.
The interest rates are tied to a national mortgage bonds that are priced out of the Chicago Mercantile. And so, Rich's interest rate is tied to a national number, whereas the Columbus real estate market is not. It's a local. So I think the point is buy, hold, and refinance when you get the opportunity. Don't wait. All right, guys. Well, thanks for the conversation. Always good. Get the different perspectives. Rich, keep after it. If you have any questions, need a mortgage, call Rich. His contact information is right here on the screen for you. And, of course, if you need to buy or sell, we'll save you a bunch of money selling your home, and we'll also help you buy that next new home as well and get you the best price possible there as well. So until next time, we'll see you for the next 2-minute update that is more like a 12-minute update.
Good.